Hey, what's up, guys? Kevin Cage here with another crypto update. Hope everybody's doing well, and we're just going to run through a few pieces of recent news today. So, first up, on Friday, November 1st, 21 Shares, a large issuer, filed with the SEC for a core XRP trust. So, we've talked about 21 Shares a lot. They are a large issuer. They have a variety of exchange traded products or ETPs for different digital assets today. So, they've already had one for XRP for a while, with AUM over $58 million, but year to date is down 13%. And if you want to check these filings out yourselves, you can visit sec.gov. Let me just go back and show you really quick. So you can go to sec.gov, you can search the filings right there. You can do a search for different keywords containing, and then just click submit, and it should pop these up. So you can check these out. You can look at the prospectus as soon as my page loads right here. You can click this and check these docs. So right here, we can see the S1 and open that up. And then you can scroll through this, looking at the table of contents, checking out the prospectus or summary, and then just looking back at these filings from Grayscale, Bitwise, Canary, and now 21 Shares. It would be great to see approval for an XRP spot ETF in 2025. Alright, next up, so this $20 trillion market opportunity caught my attention. This is in the Ripple blog from last week, how banks can tap into the digital asset opportunity. So discussing digital assets being integrated with traditional finance, marching towards mainstream finance for institutional crypto custody services. The ability to securely store, manage, and safeguard crypto assets and tokenized assets will determine whether banks are able to meet rising demand for new asset classes and position themselves at the forefront of this $20 trillion market opportunity. So this is actually linked directly to a CoinDesk article from Bitwise saying that these two industries could add a collective $20 trillion to global GDP by 2030. So these two industries are AI and crypto combined. So this was said by asset manager Bitwise in a report on Wednesday. The intersection of AI and crypto is going to be even bigger than people imagine. The race for AI supremacy is creating an unprecedented shortage of data centers, AI chips, and access to electricity. Leon said, noting that the four largest cloud companies are predicted to spend about $200 billion on data center buildouts in 2025, mainly to service growing demand for AI companies. And right here, crypto and AI have the potential to intersect in other areas other than mining, such as information validation and virtual assistants. So I thought that was pretty interesting, discussing crypto and AI, and in crypto, it's not just, finance and payments. We could even think of deep-in use cases for cloud and storage. Next up, some of you may have already read through this, but I want to scroll through it really quick, going over the Q3 2024 XRP Markets report by Ripple that was put out 2 days ago. Alright, so key highlights. We have XRP status as not a security remains the law of the land. Ripple filed its Form C in response to the SEC's appeal, which does not concern whether XRP is a security. We of course have ongoing headwinds from the SEC suggest that its lawsuit against Ripple the company is a key factor impacting XRP's price. And realistically, not as many people care about crypto unless prices are going up, and the market is pulled back thus far. And just looking at the Bitcoin monthly, looking at the last 3 cycles or bull runs when Bitcoin drew its first major move, taking out the previous cycle top, and then ran for 200 to 300 days. So just looking at price action during elections since 2012, we can see here after elections, it took about 4 months to get that first major move. Here, it took about 6 months, and then here, maybe a month, maybe even a little less. Because Bitcoin did poke into an all-time price in November, but it got that first major move at the end of December. So looking at the Bitcoin price chart and the crypto asset class today, that is my hope, knowing that elections are taking place on Tuesday, so I would just love to see another bull run in the future. So historically, when Bitcoin runs, this leads to another alt season, and that's what we've seen during the last 2 cycles for a variety of assets, and they just rotate in a random order. So that's my hope for a variety of assets. I've shared before, XRP, the 2 times that it either did a large pump or retracement was during the last 2 alt seasons when Bitcoin led the way. And also right here, just highlighting Bitwise, Canary, and 21 Shares filing S1s for XRP ETFs. So we already have Bitcoin and Ethereum spot ETFs today, slowly but surely growing, and we're seeing more filings for XRP, Solana, and likely more assets in the future. Discussing the previous Fed rate cut by 50 basis points, also discussing the Ethereum ETFs. With issuers like BlackRock, Fidelity, and Grayscale entering the market, United States Ethereum ETFs have attracted over $550 million so far, with United States Bitcoin ETFs achieving a year-to-date inflow of $18.5 billion in 2024. So whenever I see inflow discussions of Bitcoin, I just remember some of these predictions from both JP Morgan and then JMP Securities for Bitcoin ETFs in the future. So right here we have JP Morgan estimated back in March $62 billion of Bitcoin ETF inflows in the next 2 to 3 years. And then we also have a bolder prediction saying Bitcoin spot ETFs could see $220 billion of inflows over the next 3 years from JMP Securities. Now remember that the $18.5 billion of Bitcoin spot ETF inflows for year to date is just referring to the United States market. We can see the spot Bitcoin ETF AUM daily. I believe just based off of these, we can see right now today is over 70 billion. And it's also important to note right here that they're referring to incremental inflow, so I really need to look and better understand this and see how close we are to JP Morgan's prediction and then JMP Securities. Alright, a few other things for today, and we'll call it a day. So keeping tabs on the MiCA Crypto Alliance. This is the Markets and Crypto Assets Regulation, a regulatory framework based in the European Union with founding members including Hedera, Ripple, and Aptos. I'm looking forward to see them add more members in the future, even if they're not necessarily founding members. It looks like DLA Piper has also joined the MiCA Crypto Alliance as a new member. And friendly reminder, just so there's no confusion, the MiCA Crypto Alliance is not the regulatory framework. This is just an initiative established by the Exponential Science Group right here, designed to streamline and enhance compliance within the MiCA regulation. We also have Peak Network, a Layer 1 DePIN project set to launch on November 12th, so basically a week after elections, so that'll be interesting. I'll probably go over more ASI or fetch information in future videos, but I do want to discuss it more. And we'll finish up with this today. So this is a clip shared by Good Morning Crypto. This is Jed McCaleb, Stellar, XLM co-founder and also one of the co-founders of the XRP ledger, believing his company is building the first global Venmo.
The second part was like what will it look like after that?
Yeah, I mean, in 10 years.
I mean, again, like from the beginning, we've been trying to build this global Venmo. Like that's what we want to see. So like hopefully that is what transpires, right? Because that is, it sounds kind of simple, but it would be hugely impactful to be able to send money instantly in small amounts all over the world. So
a global Venmo is a very bold goal. We're going to see which or if any crypto projects are successful in the future. And the world of transaction banking is massive in the billions of dollars. Even McKinsey and Company right here saying the $1 trillion question, so possibly even bigger, for global transaction banking. So if crypto is so great, why are banks so slow to adopt this technology? Because it disintermediates everything. It gets rid of middlemen, it makes it more efficient, and they are making money based on how inefficient the system works today. So I hope you guys enjoyed today's video. Thank you so much for watching, and I will catch you in the next one. If you enjoyed this video, please consider hitting the like button and sharing your thoughts down below. As always, you can find all links, including resources for charting, trading bots, platforms, wallets, portfolio trackers, and exclusive discounts in my link tree at the top of the video description. Thanks for watching, and I'll catch you in the next one.